You've most likely heard stand up comedian Jeff Foxworthy's routine about how you might be a redneck if. But what about a bull market? How can one know if they just might be in a bull market? Here are the 7 signs that you might just be in a bull market. Number 1, uptrends. The simplest way to know that you are in a bull market is by looking at the trend of the general indexes. There are a few ways to do this. The first is by using moving averages. When the Nasdaq Composite or S&P 500 is above both the 50-day moving average and the 200-day moving average, with the 50-day above the 200-day moving average as well, the market can be considered to be in a stage 2 uptrend. It is during these times that you are going to see the strongest markets. Rather than trying to fight the current, it is best to wait for conditions to be in your favor. Just using this one indicator can quickly and easily help you gauge where the market is in its overall cycle. To learn more about the market stages, see my video, Even the Market Has Its Seasons. Number 2, strong closes. When the market is healthy, you'll notice that individual stocks and indexes often close near the high of their daily ranges. Selling may occur early in the day, but by the closing bell, most of those losses will be erased. This happens because during bull markets, stocks are in strong demand and this demand pushes prices higher. Early morning selling usually gets viewed as an opportunity to purchase shares on a pullback. While not every day will see the market close higher, on balance, you will see more strong closes than weak ones in a bull market. Number 3, high volume on up days and low volume on down days. Volume gives us a good sense on the conviction behind a move. Notice that in strong bull markets, stocks will move up on heavy volume and down on lighter volume. This happens for a simple reason. During bull markets, funds and institutions are looking to purchase stocks. This buying shows up as heavy accumulation on charts. The pullbacks that occur usually take place on lower volume since there is not much selling taking place, as the overall trend is still to the upside and investors are looking to take advantage of the meat of the move. Large volume on up days and low volume pullbacks let us know that the bulls are still in control. Number 4, higher highs and higher lows. An upward trend can be defined as a series of higher highs and higher lows. Drawing a simple trend line will help you note this. While selling will take place, stocks will make lows that are above previous lows, and the uptrend will remain intact. What is happening is that the conditions are so strong that they continue to pull stocks upward. With the line of least resistance clearly established, the trend remains in effect until the bears gain control. Number 5, new highs. Bull markets live and breathe on new highs. In a bull market, the general indexes will make new price highs, and so will the individual stocks. To gauge this, I like to pull up a chart of the S&P 500, Nasdaq Composite, and Russell 2000. This helps me quickly see where the market is in its trend. In a strong bull market, you will see a large number of stocks making new price highs, while in a bear market, you will see a plethora of stocks making new lows. An expansion in the number of stocks on the new high list can give you a sense as to the breadth and health of the bull market. Number 6, high volume breakouts. Stocks can set up and break out on any day, but the character of these moves will be much different in a bull market. When conditions are strong, stocks will blast off on enormous volume. When watching these stocks, you will get a feeling that they are getting away from you and not offering any chance of any sort of pullback. As legendary trader Dan Zanger once stated, winning horses don't back up into the gate. These type of breakouts occur on heavy volume because the appetite for stocks is so strong. When you see heavy volume breakouts occur day after day, you can be sure you're in a bull market. Number 7, you are making money. Finally, in a bull market, you make money. It's as simple as that. When you log into your 401k account, you'll notice that you are up for the month or the year. When you look at your trades for the most recent quarter, you'll note that your equity curve is higher than it was 3 months ago. While this is a rather remedial signal, it is an important one to note. Sadly, most traders do the opposite. When the market is in correction or in the depth of a bear market, they look at their account and begin to revenge trade in hopes of making back some of their losses. Or even worse, they begin to think beaten down stocks are at a bargain and they average down and they throw even more money into a bad situation. Instead, keep things simple. Remember, the only good stocks are the ones that are going up, and being at a profit on the stocks you own is a good sign that the market is healthy.